Isn't that fascinating? Everything is green today except virtual. A lot of tokens on the virtual protocol platform are down. What's going on? Let's have a look in this video, not at the virtual token itself, but at the best potential opportunity on the platform. Because crypto is all about buying low and selling high, and if we currently see somewhat of a dip in some of the tokens on virtual, maybe that's a potential opportunity. Now in this video, we're going to look at on-chain data. We're going to look at two aspects. First of all, how much organic growth is there in a particular token? And secondly, is there potentially sell pressure by the whales? So are the whales dumping on retail? If the whales are not dumping and we see a lot of adoption by small retail investors, that's potentially one of the best combinations we can have. So here's the virtual token itself. It's currently at $4.25 and it's slightly down today, despite the rest of the market mainly being up. Now the tokens issued on the virtual protocols platform have mixed performances today. Some of them are up massively, like Sidekick. Others are also falling quite a bit, like the Do They support bot. Now today, the virtual protocol ecosystem is the worst performing crypto category among all. It's down 7.6% in aggregate, while the best performing category today is Binance Launch Pool related. Now I believe this is a potential opportunity to buy some virtual protocol tokens for the cheap, because virtual protocol tokens are directly coupled with the virtual protocol price. So the price of virtual itself is mainly determined decentralized. So one might expect when virtual is going down, this is all organic. But I'm not so sure if that's actually true, because we do have a lot of perpetual trading volume as well. So the perpetual futures on Binance have more than 300 million of trading volume in the last 24 hours. Those are levered bets on the price and they get covered by the market makers as well. And so there's a lot of short-term leverage in both directions through the perps. And that's why the price discovery of virtual might not be very organic in the short term. Now here's what's important to understand. A lot of the tokens on the virtual protocol get traded directly versus the virtual token itself. So a liquidity pool is in virtual for most tokens. And so that means when virtual itself is going down, say by 10%, then as per default, because of that direct coupling, the token on the platform also goes down by 10% measured in US dollars. Again, because the price is determined versus virtual, not versus USDC. That's not true for all tokens, but for most of them. And so let's have a look at the potential buying opportunities using on-chain metrics across all of those tokens, because there's quite a few to choose from right now. Let's analyze the 5 largest. So we start with the virtual token itself, then we go to AIXBT, then the game token, then Luna, then Vader. Where do we see most adoption by retail investors and where do we not see a lot of dumping by the whales? So let's start with virtual. On the left side, we see the number of wallets that have roughly $1,000 worth of the token. In the middle, $10,000. On the right, $100,000. So it's small retail versus whales versus something in between. And so we can see how the number of small retail investors tends to grow quite a bit. It went up by roughly 30% in the last month for the virtual token itself. We can also see how the number of wallets with $10,000 worth of the token went up. That's roughly by 20%, and the whales are also not dumping virtual. That went up roughly by 10%. So there are more than 1,000 wallets now that have more than $100,000 worth of virtual. Let's go to AIXBT. We see faster adoption by small retail. So that grew by roughly 50%. But we're also seeing how there are whales that tend to sell off. So that went down by roughly 10%. Now it's important to understand that the wallets on the right are 100 times more important than the wallets on the left. So when this is going down by 50 wallets, that's equivalent to the wallets on the left going down by 5,000. So the selling pressure by the whales was larger than the purchasing by small retail. It was probably medium-sized retail that was able to offset some of the selling by the whales. Let's have a look at game. The game token saw massive growth. The number of retail investors doubled, while the number of whale investors did not go down. This is exactly what we want to see. We want to see organic adoption, while at the same time the whales are not dumping on that adoption. Next up is the Luna token. It was one of the first success stories of the virtual protocol. In the last month, the number of retail investors grew by roughly 20% and the number of whale investors fell by roughly 10%. Medium-sized retail did not grow. So in aggregate, not a great performance for Luna. Let's have a look at the new kid on the block, which rose recently quite a bit. This is Vader AI. Vader AI's adoption is roughly 60% in the last month, but unfortunately the whales are selling very, very quickly. That went down by almost 30% in the last month. The whales here clearly dump on retail. And so this is how useful this data is, right? Simply check maybe 1 week, 2 weeks from now, how is Vader AI comparing to, say, the game token? Game has very nice retail adoption and it doesn't see selling by the whales. Vader AI sees a lot of dumping by the whales while retail isn't purchasing as quickly. Of course, there's also the alternative to simply buy the virtual token itself. But again, I've said this in prior videos on this channel. I've made many videos on the virtual protocol, also very early videos. Right now, it seems like the market cap of virtual itself is already very large. So I'm not sure if there can be another 10x from here for the virtual token itself. But for the game token, I think it's very possible to see another 5x, maybe even a 10x from here. Game has only a market cap of 260 million, while virtual is already at 4.2 billion. So there's definitely way less upside for the protocol itself. It's now all about finding the good risk to reward on the platform. Now, most gains are to be made when a token is still new, when it's not owned by the market makers yet, when it's not owned by the centralized exchanges yet. It's much better to buy a token like Fartcoin, for example, for 4 cents or for 5 cents. So have a look at this. This is Kyle Chessy that bought 20k of Fartcoin on the 23rd of October of last year. That was over here. Since then, the price appreciated by more than 2000%. Here is Kyle Chessy. He's a YouTuber. He's got 141,000 subscribers. And we are tracking 12 of his wallets. So through on-chain analytics, we found out some of his wallets and we always get an alert whenever he is buying or selling something. So of course, when he makes a big purchase and then he announces this across his community and everybody buys in afterwards, this can create quite a bit of a flywheel effect. This can create a lot of momentum. And so being early with purchases like this, right? Tracking the influencers directly and seeing when they are buying and selling is real alpha. This is, I believe, where we can actually beat the market. Now, Kyle Chessy has a bit of a venture capitalist approach. So not every token that he buys will do a 2000% return. He does buy many tokens and some of them simply just go to zero. The idea is simply that the winners are so large in their magnitude that they can make up for many, many losses. If you have got one 2000% winner, then you can afford to have 80% of losing bets simply because the other 20% make that much of profit. But we are not just tracking Kyle Chessy. We are also tracking Crypto Banter. That YouTube channel has 1.1 million subscribers, so they definitely create a lot of attention and purchases with the video. We've got 33 of their wallets. We're also tracking more DeFi focused channels like Bankless, for example. We've got 2 of their wallets and we're trying to find new wallets daily. Now there's a tutorial course discussing how to find influencer wallets, how to then also track them and how to finally interpret the signals that we get from the tracking. It's 8 videos in total and it's all part of the premium membership of this channel. It's down below, thebitcointrader.com. Premium is not just about wallet tracking, it's also about on-chain analytics. It's also about risk mitigation, more than 100 tutorial videos in total. Once we've got a buy signal by the wallet, we of course also have to discuss what should we copy trade, when should we exit, etc. That's why we've got dedicated chats on the individual altcoins as well. So feel free to check it out. It's currently $165 per month. There's also a 1-week money back guarantee. So in case you don't like premium, in case you don't learn anything, etc., feel free to just message me within the first week and I will refund you 100%. There's really zero risk for you. And so, based on on-chain metrics, I believe among the larger tokens on the virtual protocol, Game is probably the healthiest. It seems to have a lot of upside, it seems to have a lot of adoption, and it doesn't seem to have a lot of selling pressure by the whales. That being said, within virtual protocol, Game is already one of the larger players, right? So once you take on more risk, once you take the smaller market caps, there is also more upside. But again, then we have to do the on-chain analytics to find out where we actually see quick adoption without selling. If you got some value out of this video, feel free to subscribe. I publish videos regularly. A like would be very much appreciated as well. It helps the channel grow. See you in the next video or see you in premium. Cheers!